On-chain data shows Bitcoin long-term holders have ramped up their selling recently, something that could lead to further plunge in the crypto's price. Bitcoin exchange inflow CDD has spiked up over the last day. As pointed out by an analyst in a CryptoQuant post, the current rise in the CDD is the largest since 6 October. A coin day is the quantity that one BTC accumulates after staying still for one day in a single address. If a coin that has amassed some number of coin days finally moves to another wallet, its coin days counter resets, and the coin days are said to be destroyed. The coin days destroyed, CDD, metric keeps note of the total number of such coin days being destroyed throughout the network on any given day. Another version of this indicator is the exchange inflow CDD, which measures only those coin days that were reset because of transactions to centralized exchanges. Now, here is a chart that shows the trend in the Bitcoin exchange inflow CDD over the past month. As you can see in the above graph, the Bitcoin exchange inflow CDD has shown a sharp rise in its value recently. There is a cohort in the BTC market called the long-term holder, LTH, group, which includes all investors who hold onto their coins for long periods without moving them. Related reading: Bitcoin capitulation deepens as asymmetric plunges to deck 2018 lows. Because of the dormancy of their coins, tails accumulate large numbers of coin days. As such, whenever these holders follow the URL for the full article. For more on this story, visit the news article link.